Hello and welcome to Explain the Charts. Today is December 31st, 2024, and we will be performing an in-depth analysis of the SPY. Recent news and Google searches reveal significant market fluctuations and uncertainty surrounding the year's end. Major indices, including the Dow and Nasdaq, experienced sharp declines, with the S&P 500 facing its worst month since April. These events, indicating profit-taking and possible portfolio rebalancing, have undoubtedly impacted the SPY. Let's begin our analysis with a look at the overall daily chart, assessing the general trend and identifying any significant support or resistance levels. Examining the daily chart, we observe a recent downward trend, suggesting bearish sentiment. The price action shows a noticeable decline from the recent high of 601.34. Support can be observed at the 585 level, which the market seems to be testing and holding. Notable resistance is located at the 600 level. The volume indicates increased activity during price drops. However, it is also important to note that these levels can easily change. Switching to the hourly chart will provide a more granular view of the recent price movement. Now, let's shift to the 1-hour chart to gain a clearer understanding of short-term trends. Focusing on the last 24 hours, the chart reveals considerable volatility. We notice several fluctuations within the support and resistance levels observed in the daily chart. The 1-hour candles show a struggle to maintain higher prices. Significant trading volume accompanies these short-term price swings, reinforcing the intensity of the market sentiment. However, it is difficult to discern a clear short-term trend from just this time frame. For a very short-term perspective, we'll examine the 15-minute candlestick chart, focusing on the most recent activity. This view gives us an even more detailed perspective on the price action. We notice numerous small fluctuations in the recent hours of trading, which may be indicative of investors trying to determine the next direction of the market. We see some small periods of increased volume, which might be significant, although this alone does not determine the future market trend. The very short-term price movement is very hard to predict with only this time frame alone. In summary, the current market exhibits both short-term and long-term bearish signals. While the SPY has shown some resistance around the 600 level, the prevailing bearish momentum is apparent. The support level of 585 is crucial to watch, as a significant break below this could accelerate the decline. Conversely, a decisive break above 600 could signal a shift to a bullish trend in the short term. The upcoming days will be key to determining this, as investor sentiment and related news will influence the direction of the market. We must remain vigilant about breaking news, since that may affect the market. Key levels to watch are support at approximately 585 and resistance at 600 on the daily chart. There's a moderate likelihood of a short-term bounce if the price remains above 585. However, a consistent break below this level would drastically increase the likelihood of a continued decline. In the short term, a decisive break above 600 could indicate a possible short-term bullish reversal. In conclusion, careful observation of breaking news and volume will be critical in deciding short-term trades, while looking at the general trend, and testing and support and resistance levels are better for long-term trades. Thank you for watching Explain the Charts.